This is the exact reason you're not closing enough loans in your hard money lending business. I've seen this endless times inside our business, and I've seen this also in dozens and dozens and dozens of other hard money lending businesses. So go through this with me for the next 20 minutes, and I promise you, you're going to get some good tips and tricks on how you can convert more of your leads into loans. Let me share my screen real quick. We're going to go through the loan conversion strategies that we practice every day inside our hard money lending business. And it really, really, really helps. Times are different than they were in the past. And you have to use tools. You got to be proactive. You got to be able to convert the leads that you're getting into converted loans, because that's the important part. So as you can see, this kind of chain link right here on my screen, all of these kind of go hand in hand, and we're going to go through these one by one so you fully understand how to convert your leads into actual loans, because it takes time to generate business. It costs money to generate business. And the last thing you want is to be losing your deals to institutional lenders and other hard money lenders when you know you have a good product and you're going to provide good customer service to them. And that's in essence what these real estate investors want. They want a truthful, honest, hard money lending company that they can continue to work with on their deals over and over and over and over. So you got to do what you got to do in order to secure the business. So let's start off right here with calendar appointments. So remember back in the day when you used to have, a long form loan application or a vetting process to get borrowers, interested in working with you, or in essence, a pre-approval process in order to get them moving to see if it was a deal you wanted to work on. Well, those days, it's different out there now. The goal is to get on the phone with as many borrowers as you can. And when I say a borrower, I mean a real estate investor. A real estate investor who's buying an investment piece of property, either an investment residential piece or a commercial property that you want to do a loan against. The goal is to get them on the phone and create a calendar appointment. You don't need to give them excess work by filling out a loan application. Maybe they get around to it, maybe they don't. I understand, and we'll go through rebuts here in a second that, I want to make sure that they're serious. I get that. Get them on the phone, have a very brief conversation, go through what their project is, and let's see if it's something that you can even do to begin with. Start with that. That's easy. You can replace calendar links on your website and on your email signatures instead of your traditional, hey, apply now for a loan application. The calendar appointment, there's lots of different apps that do it. And you can even integrate it with Google Map. That's no problem as well. The benefit of the Google or the calendar appointments to begin with is you get their contact information. They pick when they want to chat with you, right? You obviously set the times and the dates on your calendar of when you're available, and they talk to you and they take it serious, right? It's like, oh, I have an appointment with my hard money lender at 3 p.m. tomorrow. And with all of these apps, there's also reminder tools where they send them an email, they send them a text. Hey, don't forget you're speaking with Jason at, in 15 minutes. And our show up rates have been very, very high because they've taken the initiative to do that. Someone might fill out a 30 field loan application and I can't get a hold of them 5 minutes later. But with the calendar appointments, they can do that. And if you're rebutting of, I don't want to just talk to unqualified people all the time, you can put qualification questions in the calendar appointment, like where's the property located? How much money you want to put down there? So it looks like it's a calendar scheduler, which it is, but it also has qualifying question fields on there as well. So you can determine if it's an area you don't want to do, put an auto response in there if you need to. But the goal of this is to get people on the phone and have real live human conversations. Calendar appointment. Implement that very, very quickly inside your business. We're going to get back to CRM management because I think that's an important factor on this, and we're going to kind of leak a few of the things. This last thing that I'm going to discuss, the email negotiations, that's like the most important thing. And I'm going to get to that at the end because I want to make sure, you understand all this other stuff first. But if you don't have this part down at the end, you could be screwing yourself completely because this is so important. Okay. So what I mean by 2-funnel system is we have a built out CRM. We've tried lots of different CRMs. At the moment, we're using Go High Level. We enjoy that a lot. We like that a lot. Honestly, it's kind of a bear to get built out, but all the CRM services are. So you want to keep it simple. We have a 2-funnel system. That's what we call it, and it's simple. The first funnel is getting in contact with the borrower, right? Let's just talk about that real quick. Contact, and then the next one is follow up, nurture. I'm just going to click on follow up, and then let's do nurture, and we'll talk about what each of these are. So let's say somebody doesn't go through the calendar appointment, or maybe they do and we can't get a hold of them. Most of the time we can, but we can't. We put them in this contact funnel, and they get an email and a text message every day for 7 days. They've already reached out to us, and our goal is to get them on the phone, and we can't. So let's say they no-show a calendar appointment. They get put into there. Hey, by the way, still want to make sure we chatted, we talked, let me know what works best for you, refill out a calendar appointment. So we're texting them, we're calling them, we're trying to get them to call in or pick a time that we can speak to them. This might be they fill out a loan application, right? You still might have a loan application on your website, and they fill that out, then you can't get a hold of them. Maybe you're buying leads from connected investors or a lead portal place, and you can't get a hold of them. Maybe they shoot you an email about a scenario, and then you call them and you can't get a hold of them. This isn't to replacing outbound calls to speak to the borrowers. That's super important, and you should be doing that. The point of this first funnel, which is 7 days long, is to the people you cannot get on the phone, is to hit them up with emails and text messages daily in order to get them on the phone. Now, keep in mind, they've requested that they speak with you, right? So this isn't like spamming random strangers. I'm talking about people who have already reached out to you, and they want you to contact, and they want you to contact them again, but you can't get a hold of them. Those are the ones. That's the 2-funnel system. The first funnel, get in contact with them. The second one is our follow-up nurture, where we stay in front of them over a period of time, typically monthly for email, could be weekly for email. This particular campaign we have that it's monthly for email, and then it's quarterly for text and other stuff. But the goal is after they're in the sequence, or after you've communicated with them, then they get put into the nurture sequence forever type of situation. Because let's do a real life example, because I think this is helpful. So let's say you talk to a potential borrower. You can't get let's say you can't get a hold of them, right? And you send them a text message, you send them an email, you can't get a hold of them. Typically day 3 is where we've had the most success. In the past, we used to only do 1 call, 1 email, 1 text. Didn't have great results. Now that we have a longer term sequence, day 3 is typically where we've seen the best results recently. So let's say they call back and say, hey, Jason, sorry, I thought I could talk a few days ago and I got tied up, but I'm ready now. No problem. And we talk about their deal. It's a deal that we just can't do for some reason. Maybe it's not an area that we lend in, or they just don't have enough cash to close, or maybe they just didn't get under contract. No problem. Why don't we do this, Bob? Why don't I follow up with you, at a later date? I'll put you in our email newsletter, and we'll touch base maybe in the next 30 days or so. No problem. That'd be great. Put them in there, and then they're in the nurture sequence. For the most part, every single person goes into the nurture follow-up sequence unless they're active loans that we're working right now. Because I don't want someone who I'm working with that's closing in 2 weeks to get an email about, hey, can I help you with your next deal? Because that's what that nurture sequence is about. Okay. Everyone got that? Any questions related to that topic, just feel free to comment below this video and I'll answer them. I'm going to skip to next steps, and then we're going to talk about some price anchoring, which is a sales strategy, and then email negotiation as well. So the next steps, we call this the next steps with our team, because at the end of every conversation that you have with somebody on our team, they have to determine what the next step action is going to be. And the next step action is always creating a task or a calendar appointment to get back on the phone with that prospect or that lead down the road, right? It might be tomorrow. It might be in a year from now, depending on the qualifications. Let's go through real examples. You're at a meetup group last night, and you speak to somebody, and they say, and you speak to somebody and you call them the next day. Let's say you call them today. Say, hey, Jim, really nice chatting with you yesterday at the meetup group. Hopefully you were telling about this deal that you might be buying. It's like, oh yeah, I'm going to look at it tomorrow morning at like 3 o'clock, or tomorrow morning at 11 a.m. And we'll see what the condition is, and I'll see if I can buy it. No problem. That sounds great. I'm here for you. By the way, why don't I touch base with you tomorrow, and we'll see how that goes. And then, if you think you're going to buy it, I'm happy to discuss financing terms. Yeah, that's great. Okay. I hang up the phone. I go into my CRM, or I go into my calendar, or whatever way organizes you. And I set an appointment at, hey, I'm going to call you at 4 p.m. tomorrow. We'll see how that works. Like later tomorrow afternoon, you schedule a meeting with them for 4 o'clock. Maybe it's a meeting that it's a dual meeting, or maybe it's just, a reminder to you, call this person back at 4 o'clock. And then you call them at 4 tomorrow and say, hey, did you get the property under contract? It's like, nah, I didn't get it, but I'm still out there looking, type of thing. And I appreciate the follow-up. No problem. Why don't we do this? I'm just going to make a quick note to follow up with you in like 2 weeks. We'll see if you have any deals under contract by then. Yeah, that sounds great. I appreciate it. Great. So I go in my CRM, my calendar, my task list, 2 weeks out, schedule an appointment to call Jim again. And that's what next steps is at the end of every conversation. Now let's do another extreme. You call a borrower and say, hey, listen, you call a potential borrower on the phone, or you're talking to them like, yeah, I decided to get out of the game for a little bit. I've been really busy with my day job. I might get back into real estate investing in the future, but I'm not currently doing any deals. No problem. No problem, Bill. Why don't we just do this? I'm just going to make a note to follow up with you, in 6 months or a year from now, just to say hi. And, maybe there's something that we can work on together in the future. No problem. I appreciate it, Jason. Click. Cool. Go to my calendar, go into my CRM. Next steps, follow up with Bill, 7 months from now, a year from now, whatever the case is. And there you go. So in essence, you're building out through these next steps, calendar appointments for yourself, or reminders. You're building out a warm call list for people in the future. What I would also do, as soon as you get off the phone with them, I shoot them an email and a text and say, hey, nice chatting with you earlier. I'm sorry, you're not actively involved in investing in real estate. I do want to make sure you still have all my personal contact again. Here it is. And I'll probably follow up with you, later in the year, just to see if anything's changed, to see if I could help out. And that's it. And then you're taking all of these leads, and you're, in essence, creating follow-ups for them in the future. So that's what we do by next steps. And it's so powerful. So powerful. So, one, actually, I'm going to leave the CRM management to after email negotiation, because there's a few tips and tricks I want to talk about on that. Let's talk about price anchoring. So price anchoring is so important when you're selling, and you're doing lending. And I think too many lenders don't, they take it for granted that they think that every real estate investor just wants and needs 100% financing. And a lot of people do want high leverage, but that doesn't mean that they won't go with you if you give them lower leverage that you're comfortable with. Typically we're lending up to 80% of the purchase price, 100% of construction, but our average loan is about 60% of the purchase, 100% of the construction. That's just what it ends up being by doing price anchoring strategies. So let's talk about what price anchoring is. Let's use a real life example. I call somebody and they call me, whatever the case is, and they say, hey, Jason, I'm buying this property for $100,000. I'm going to write that down, $100,000. Use a different color pen. I think that'd be helpful. Let's see. I'm buying this property for $100,000, and it needs $50,000 worth of work. And I think I can sell it for $200,000. And it's like, yeah, that's great. And we do pre-qualifying questions. Have you done any deals before? How much cash, do you have that you think you can put into this? Blah, 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 blah. Right. So we're having a normal conversation. That's all part of scripting for hard money loans. You're probably familiar with that. If you're not, I've done other videos on our scripting process. The price anchoring is the important part. So then I say, hey, listen, yeah, let me see what I can do. I'm not fully sure, how comfortable we are lending in this area. I got to jump offline, pull some comps. But if I was able to lend you, I don't know, $100,000 on this property, that would be 50 towards the purchase, 100 towards your construction costs. Is that something that you can make work? So that's what the price anchor is, right? They're buying it for 100 plus 50, right? So their cost is 150. And I'm asking if they can make 100 minus 50 work, right? Oh man, what just happened to my screen? Hang on one sec. There we go. And I'm asking them if 100 minus 50 can work, which equals 50,000 towards the purchase, 50,000 towards the renovations, right? So that means that they're going to need, what are they going to need? They're going to need 50, probably 60-ish grand cash to close, call it, right? They're going to need 50 grand because the difference between 100 purchase price and the 50,000 towards the purchase price is 50 plus closing costs, call that another 10 grand. So they're going to need 60 grand, right? So that means we're putting up 100, they're putting up 60. Pretty decent deal, right? For a hard money lender, if you're putting up 100 grand and the bars bring 60 grand cash to close. And that's what I do. That's what we do based off price anchoring, because we start kind of low and then we work our way up. So I say, hey, if I can do that, can you make that work? Now they might be like, honestly, like I'm looking for a little bit more. You know, I'm looking for, I don't know, 100%. It's like, hey, honestly, like 100% isn't something that we can do. I know that, you know, the 60,000 might seem like a little bit more than you want. Like, what could you make work if we're able to get this done and closed, you know, when you told me you needed to close next week? Well, you know, I might be able to make, you know, 40-ish work. Be like, yeah, you know, and that's somewhere, you know, close to in the middle, right? And then my response would be like, okay, let me see what I can do. Like, if it had to be slightly more, could you make 50? Like, if we have to, I know you want to be, you know, less, but if it was 50, could you still make that work? Typically, like, yeah, it's a little bit more than I want to, but like I can make 50 work, right? So there you go, right? Now, what normally people would do is, you know, they'd say, hey, how much, you know, do you want? People would be like, oh, hey, I'm looking for $150,000 loan amount, right? With zero, you know, in essence would be $10,000 out of pocket, cash to close, right? Because it's just closing costs. And then, you know, they start with that. And then, you know, in essence, you kind of look like the bad guy because now you're trying to get them to bring more immediately, or you need them to bring more. I like the price anchoring because you see where their head is. And some of the times they'll be like, yeah, 60,000 works. I don't mind that. I have that money. I have $100,000 liquid, no problem. And if they say, well, I only need, you know, I can only do this at, you know, 100% financing, then you say, hey, unfortunately, you know, that's not going to work for us. You know, we won't be able to make that work without cross collateral or, you know, a cash partner type of thing. So you got to see where their head is. And if you do the price, the important part about the price anchoring, if you do this the right way, nobody is ever mad at you. Like nobody's like, screw you type of situation. Because you say, hey, listen, let me see what I can do. You know, if we could come in around 100 grand with 50 minus construction costs, is that something you can make work? Right. And that's it. Like, you're not telling them that's exactly what you're going to lend or not lend. That's just the way you're structuring with them. And you kind of float that price anchor, right? Because you tell them 60 and then, you know, let's say it's like, oh, I only got 40. Can you make that work? Great. That's still like 40% down almost, right? That's still really, really good. You look like a hero if you say that, if you structure it that way. Price anchoring is so important. Stick to that. Any questions related to that, comment below on this video. Let's go to email negotiations. So it says email negotiations in this, but it is actually never do email negotiations. That is the one thing you don't want to do. Man, I kind of mixed up these colors, right? That should have been a red X, not a green X. But anyways, do not do email negotiations. You do not ever talk price over email. This is what happens. If somebody calls you, or I'm sorry, if somebody emails you or texts you that says, hey, Jason, I'm buying this, you know, I want to buy this property. How much can you lend me? My response is, no problem. What's the best time for me to call you? Or I'll call you real quick. Or, and we can discuss, or what's your phone number again? Or, hey, I've got some time later this afternoon. Jump on my calendar and we can discuss, because I'm never discussing terms over email negotiation. And the reason why is, think about this price anchoring conversation we just had. Do you think if I emailed this exact conversation I just did verbally to somebody, wouldn't they just tell me to pound sand, or would they never respond to me again? Probably, right? It would come off insulting. So let's say, you know, someone says, hey, Jason, I just bought 123 Main Street. I'm buying it for 100,000 and it needs 50 in work. How much can you lend me? And let's say I responded to them over email and said, oh, I can lend you 100 grand, 50 towards purchase, 50 towards construction. You'll need 60 grand cash to close. Boom. I'm never going to hear from that person ever again. Right? Just not. Right? They're going to be like, what the heck? Why are they making me bring so much cash to the table? Type of thing. You cannot negotiate over email ever. You have to get on the phone with these potential leads immediately and go through it. follow the price anking script and whatever other script that you use in order to explain to them the reasoning behind it. I mean, I've talked to, we've done 4,000 of these loans. I've talked to hundreds and hundreds of thousands of real estate investors. And this is the script and the strategy that we follow on all of them when we're doing this. Nobody, I mean, less than 5 people ever have been pissed off at me or upset with me of like, why are you lowballing me? Right. And I can rebut that too. Typically, it's like, hey, listen, I'm not lowballing you. We're a private lender. We lend our own money out. This is all we're comfortable lending. I don't really know the area, or this is the first deal we've ever done together. I don't know this is what I'm comfortable with. I didn't want to insult you, but I wanted to give you a number that we were comfortable with, right? That's like the worst case scenario ever. And that doesn't typically happen. I'm just telling you the 5 people ever that were pissed off at me, that was my rebut. They're like, yeah, no problem. I get it. So important. Do not negotiate over email. And everybody is guilty of this. Every single person. Too many people are guilty of this over and over and over. Don't catch yourself. If you're busy and somebody shoots you an email or text, say, hey, I'm buying this property. Real quick, how much can you lend me? Don't do it. Don't respond over. Say, hey, no problem. What's the best time to call you? Let's chat real quick and we can see what we can do. And then, lastly, we'll talk about CRM management real quick. I don't want you to be too overwhelmed with, the funnel system and the calendar appointment systems, because like, again, we use Go High Level. So a lot of this stuff is already built into here. We've used Infusionsoft in the past. Just keep your CRM management simple. Don't overcomplicate it or you're not going to use it. All of these projects, all of these CRMs they're challenging to say the least, right? To set up. And, if you find a third party to help set this up, it's going to be expensive. So like start it yourself, maybe keep it very clean. Just have a system that works for you where in essence you can email and you can SMS out, have the 2 funnel systems that get put in to this. So you can have some automatic autoresponders and nurture emails and text. Like that's very, 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 very powerful to be able to do that automatically. So you don't have to manually do it, but keep it simple and do it at a price point that makes sense for you. But organizing things that way is great. And it's not just the funnels and the calendar appointments. It's also, the follow-up calls, through tasks, right? Like what we do right now is if I get off the phone with somebody and I need to call them next week, in the past, I would just put them in my calendar to call them. But now I put them up and it pops up as a task inside my CRM with that contact record. And I can call them through Go High Level, or I can text them, or I can email them through Go High Level. So that's how we have it set up. Hopefully you guys found this training helpful. If you'd like additional trainings like this, if you'd like to ask questions related to this, or if you're just interested in chatting or working with our company, Hard Money Mastermind, just comment below. Real quick, happy to help. Until next video, see you guys then.